Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Monday. Welcome to the Monday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an absolutely great weekend as we are heading into the week before Christmas in what has been a wild and crazy month where we've seen some big swings in the market. Let's see what we do this week. Before we get started, if you're not a subscriber, do me a favor, click that subscribe button, hit that notification bell. If you are a subscriber, do me a favor, drop a like, drop a comment, anything to make the YouTube algorithm know that people are watching this video. And also tell a friend about it, would you? Share it with some friends. I'd like to spread the message of what it is we're doing here on the DMC. All right, let's go ahead and dive right in. So the S&P this morning, we're up just a smidge, about 4 points. Yesterday in our we had a live trading room last night. Our Sunday night live trading room is designed to kind of set up the week from a swing trading perspective. And one of the things that I said when we were looking at it was there's just not a whole lot we can do, because it was right about here, about 8 o'clock, 9 o'clock. And I said, there's just not a whole lot to do. Let's see what happens with the London Open. So the London Open occurred, and there's still not a whole lot to do. We are definitely in kind of a basing scenario. There is a potential, if you're a small time frame fan, based off of this area right here, chopping around, there is a small time frame breakout potential above this Globex high. Now, be aware that anytime you take a long above a Globex high, that's not a major market open, and this is the European Opens, was down in here. You do run the risk of what's called a bull trap, right? And a bull trap would be a supply area, an area of supply control above a traditional resistance breakout. And so be aware that is something to concern yourself with. This is not a super high quality area on its own, though. And the reason this is not a super high quality area, for those of you that are familiar with with my style of trading, looking at reversals, when we look at a reversal exists because there's one type of orders left behind, right? We think about orders being what creates a move. So if I think about this area right here, well, this area up here was created because price came down, and it came all the way down. Now think of this candle here. At one time, this candle with this long wick was a big red candle. So you had big red candle, and so price got as high as 26.39 and then dropped as low as 26.22. Now that's 26.23. Now that is, what's that, 16 points? 16 points in the S&P. That's about 150 points in the Dow. I mean, that's a pretty substantial move down. Now, when it moved down, it left behind sell orders in its wake. People that wanted to sell up here, that once price dropped down this low, they said, I'm not willing to sell, but they leave their orders in place. Well, take a look at these next two candlesticks. These next two candlesticks have some fairly long wicks attached to them. And those long wicks that are attached to those candlesticks tell me that price came back up into here and then sold off. And by the way, we did it again and sold off. Now, there still may be some orders left in there, but there cannot be, this level is not going to be what we would consider super high probability, due to the fact that we've put our, think about putting your hand in a cookie jar. The more times that you put your hand in a cookie jar and you start taking cookies out, eventually you're going to run out of cookies, right? And if you run out of cookies, then you're going to be angry. Well, think about it for a moment. The sell orders here are our cookies. We've already put our hand in the cookie jar twice. And by the way, both times that we've come out with our hand, we had cookies in our hand. And so we got a really nice move away. Now, there's probably still some cookies left in this jar. We don't know how many are left, right? Because we can't see inside the cookie jar. We can just question whether or not there's some left. So what I'm going to do is convert this to a confirmation style entry using our purple lines. And the reason I use purple lines is because by definition, a 15-minute level is going to have a lower degree of probability than a 60-minute level. So that's kind of what I'm looking at the moment. There is a potential for a breakout if we get above 26.18 all the way up into here. Now, am I looking at a breakout on a bigger time period? The answer to that is most definitely no. And the reason for that is because my 4-hour chart, my big picture, still tells me to be a seller, right? The only way I can take a long position is if I'm trading on a snapback rally on the small time frames. I don't want to trade against the big picture direction, but if I'm using the 1 hour as my big picture, right? If I'm using the 1 hour as my big picture, then I'm using the 15 as my small time frame. Once I get higher than this candle's high, by definition, I'd have a higher swing low and a higher high. So technically, I could be a buyer at that point. So it's just buying a snapback rally above this basing area. So your risk is a bit higher whenever you're doing that, but it may be something worth looking at. So there's kind of a trade idea in the ES today. Let's see how that works out for you going forward. In the Nasdaq, we had looked at a couple of levels last night for potential reversal. So in the NQ, we've got a little reversal potential up here, 67.78, 66.98. There could be a spot up here. Nothing really has changed on that. Now this is partially why that bear trap that I just talked about exists. Excuse me, bull trap exists, because there's this area of supply up above where we have some sell orders kind of left over. Crude oil. So in crude, we had our contract shift. And on our contract shift, we got a little bit of a gap up, and not a whole lot has happened since then. Now, in the last hour or so, we've had a really nice run up in the price of crude, comparable to the moves that we'd seen earlier. But we're still kind of very range bound. And one of the things that we looked at last night was the potential of doing an iron condor in crude oil and getting paid for price really going nowhere. There's not a whole lot out there at the moment that makes a lot of sense. I mean, you have to go out about 33 days, or maybe it's 31 days. And none of those seem to work when we looked at the options on futures. I do still occasionally look at options on futures for potential trade ideas, and that one just didn't pan out. It wasn't the right trade. So we kind of held off. There's really nothing I want to add to this at the moment. I'm gonna step back and just kind of let this be. And you're gonna actually see that as a very common theme today. There's a lot of just step back and let it be. Looking at gold, we're starting to get a bit of a rally higher. Put a little bit of a small reversal area up in here. Down. None of these areas here are anything that I'm super stoked about. We didn't get a huge move off of our European market open. I want to see if we get a little reversal off of this wick over wick area here. You see this area of wick over wick level. Now, this is a very small level, but that could act as another form of resistance. But what we're seeing here is slightly higher lows and a level that's been hit once. Actually, it was hit once and moved away. Hit a second time, traded a little deeper into it, moved away less. We've now hit it a third time. If we base in here and break above, this now can become a breakout candidate above this area, right? So you do have a potential for a breakout above this area if indeed we get through that level. Now, I'd still want to see a little bit of basing before. A little bit of basing before would be important. But when I look at this, this is a 1, 2, we're into our third touch. My rule on a breakout is it's got to touch 3 times, then I got to have room to roam. My room to roam here is not exceptional because of all this chopping that we had through here. But all that chopping could also mean that most of those orders have been eaten through. So if you get a breakout above here, remember your breakout rules, and your stop would have to go below the prior pivot's low. Okay? All right. Next, let's go to our bond market and our currency markets. So in here, looking at the bonds, you will see that these are the levels that we identified last week, and we are still in between them. I've got nothing more to say on that one. I'm going to go fairly quick on these next couple because there's not a whole lot more to say on the bond levels. Looking at the Aussie, we identified a potential small reversal up in here on this little wick over wick resistance. Now, remember, that wick over wick is simply the fact that we were basing sideways for a small period of time, and then that will make itself more evident on a smaller time frame chart. Right? You can see that one candle's wick right in there. There's got to be some sort of orders left. Question is, are there enough to cause a turn in price? The euro is getting really close to our level up here. We're getting really close to our potential level here in the euro, as we've seen a lot of strength come in here in the euro. Now, this is not a buying opportunity for me, just simply due to the fact that this wick came down, retested that level, and we'll see exactly what our reversal looks like when indeed price gets up here, but we're coming in with some decent strength. And then the Canadian dollar, it's doing a whole lot of nothing. I'm going to hold off on the Canadian. Canadian runs very similarly. It's very dependent on oil, and with oil in the tight base that it's in, the Canadian dollar as well. Great British Pound, we have come into our potential reversal level. For those of you that were in the trading room last night, we've hit our activation spot, and now we've started to come down out of it. So if you are in this one, then you're starting to get a little bit of a run. If we get even a move down to 26.46, move your stop to break even, because I don't love all the basing we had in front, and then we got a little bit more basing before coming into the level. Now that we've come out of it a little bit, I don't need a big move in order to move that stop down and lock myself in, because I don't love the basing we got in front of that area. In copper, we've come into our potential reversal point and started our move up. This is a confirmation style entry off of a 15-minute chart. Once again, I don't love the basing that we got in front of the area. If you're in this thing, be very, very quick to take your stops, move yourself to break even very quickly, just due to the basing in front of the level. And this is the time of the year when we're going to get more basing in front of levels. The more basing that you get in front of a level, the lower the probability is. Well, that's just welcome to December, folks. We looked at a couple of iron condor potentials yesterday, and we're going to continue to look for iron condor potentials to sell during this period, because this is a really good opportunity, especially the stocks that have weekly options, to sell iron condors for things that are expiring the first week of January. There's a December 4th expiration date for a lot of those weeklies. Those become really nice and very attractive, because you lose you lose Christmas Day, you lose New Year's Day, you have half a day for Christmas Eve, half a day for New Year's Eve, and those are your market's not open, but your time is still passing. So it's one of the better trading opportunities to look for this time of year. So tell everybody, I hope you have an absolutely amazing day. If you need anything, please shoot me an email, support@tradersarmy.com. Until tomorrow, everybody, I will see you soon.